Hello, this is Patrick with Chart Built Wealth, profitable investing with technical analysis. The market is giving up quite a bit today. Um, it's not surprising given how extended it is. I'm going to try to do this intraday more often because it gives you trading opportunities. And I think the people that watch these videos are mostly trading oriented, but you can apply your own principles if you're more of an investor, longer term investor. You can also use this to help to add to positions and to build positions. So, anyway, let's get into it. I'm trying to figure this out what viewers like. So, here we go. This is the S&P 500. So, at the beginning, at the beginning of the day, this chart is always on my mind. And uh, these monthly bearish engulfing patterns. We had one a couple of months ago, and it didn't matter. Usually, those were significant tops. We got good corrections after that, but you can see this one. We've now had, we're in the second month above that. Now there's still time left in the month to have a big drawdown and maybe make that relevant. But what I really wanted to point out on this chart is that as all these higher highs are hitting on the S&P 500 and the broader market, we're getting lower highs on our relative strength index, the RSI index, which this is larger than the one that I saw in 2000. So this is really significant, and at some point it's going to matter, and there will be something very large on the downside. You want to keep that in the back of your mind and not to get too super aggressive here. But there's always things that are working, and we want to take advantage of those. So, crude oil, I got to talk about it. I did a update. Uh, I did a I did a YouTube video on it about a week ago, and I wanted to touch base on it again today. And this is the big picture. I'm not going to spend a lot of time on the big picture because I would refer you to the YouTube video I did a week ago for all this color. But real briefly, it looks like the downtrend in oil has been broken back in 2022. And now we're coiling in the form of a symmetrical triangle. So this is building energy. And when it breaks, it's going to break in a very dynamic way. And it looks like it's breaking to the upside, but we'll get into that in a second. The other thing is on my simple cycles here that I'm drawing. These are very simplistic. There's much better cycle people than myself. It looks like we should be going into a uptime for crude oil over the next year and a half or so. So that's in the back of my mind, but I really want to focus on this. This is going to break one way or the other, and it's going to give us the next direction. And so here it is. It looks like we're trying to break out to the upside here. And, Friday will give us a better indication on where we are here. But this is USO. This is one of the ETFs that tracks crude oil. I'm not showing crude oil because I only get end of day updates, and this is intraday. So if it is able to break out to the upside, if you measure the base of this triangle and project up, you get 115, and that's a huge move. That's 40% plus upside potential. So let's see if we can go down further, drill down further, and get to maybe what's going on and whether we should be involved at this point in time. Even on this chart, it's telling me yes, but it wasn't a dynamic breakout a couple of weeks ago with no big uptick in volume or anything. So let's drill down here and see what we got on a daily chart. So here's a daily chart. And so what we do have here is we had a gap down yesterday, and now we have a gap up today. And so we have a classic island reversal pattern, which aren't fail proof, but more time than not, they do mark a significant bottom. And And so there's also island reversal tops, but this is a bottom. So this is a bullish island reversal pattern. So one way to look at this, if you're not involved in oil, I am, but I actually added this morning, even though it was up, which is goes against my principles. I always sell when things are up. I sell something and I buy more in something I want to be involved in when it's down. But because of this island reversal pattern, I added a little bit more to my holdings. If it's in a non-IRA that you're investing this in, you might want to look at OILK because it doesn't issue a K1 and it's less of a pain. But this is a pretty big development. I think it's great. I would put a stop down here at, 77 and a half. And, the potential upside based on on my chart is 105. So your reward to risk is huge and your downside is limited. And so also if we look at the point and figure, I'm sorry, let me go back here. What is my price projection? My price projection is 115. The point and figure price projection is 106. So even at 106, buying here and putting a stop 77 and a half or something would be uh, prudent. So that's where I am on crude oil. The problem I have with energy stocks, and I am bullish on energy stocks, but I think owning the actual commodity also is beneficial because sometimes if the market totally tanks, uh, oil energy stocks will go down and crude oil could actually still go up. So you want to diversify yourself a little bit within the energy space. This morning, Marathon Oil, Devon Energy, um, Chevron, all the things that I've suggested were up huge, or huge. They were up over 2%. They were up yesterday, I think close to 3%. So of course, yesterday I sold a little bit. Again, my example is if I have 100 shares and it's up 3%, I'm going to sell 3 shares. I'm going to just to lock in some gains on that. And again today, this morning it was up 2%. I sold a little bit more, maybe another 2 shares, and now it's pulled back. It's those stocks are slightly up, but nothing like they were early this morning. And I may just buy those shares back that I sold earlier this morning. So that's the difference between owning the commodity and energy stocks, in my opinion. Energy stocks, you get a dividend though also. So I own both. I have about 10% in energy stocks, you know, maybe 3% in energy and oil at this point. I'll probably get it up to 5% at some point in time. I also own the Reuters Commodity Index, which is 60%, I believe, crude oil. So, and I probably have 3% in that. So I got enough energy. So, anyway, that's my thoughts on energy. And I thought I would share this on crude oil with you. Here's one energy stock I suggested that's not acting well. I don't know what's going on, but you can see after I suggested it, it went up, I think it was 7 or 8% that day. And I sold at least a quarter% of what I owned. Maybe it was like a third because whenever I get something like that, I'm going to unload a good portion. We were up to 18 and our price projection's 1950. So unloaded and now I've been nibbling down here and now it looks like we're going to get stopped out today. What will I do in that case? I will probably sell. Uh, I'll probably sell a third more of uh, what I had, or maybe a half at the most. We're starting to get a rainbow convergence here, a bearish rainbow convergence. It looks like it would take another day or so for these lines to touch, and that would be when I would try to buy back in again. So that's my thoughts on this one. It's not working very well. It did work, but now it's not working, and so I need to communicate the good with the bad. So here we go on to uh, Abbvie. So here we go. Big up week, up 347. I believe it's up to something today. So again, I'd be selling some. If I had 100 shares, I'd sell, 5 shares. We're looking for 195. We're at 175. So, I'd sell at least 5 shares at this point in time. So I'm expecting a higher high, and that's it on Abbvie. So these are things that you want to touch each day when they're up. You want to sell a little bit. When things that you want to own are down, you're going to buy more than you were selling on the way up to build your position. REITs, here's National Retail Properties. This is one of the REITs that I suggested, and you can see it's having a big day, up 121, one little over 1% today. So I've been selling on each one of these days. If I had 100 shares, I sold 5 shares here. I sold 2 shares here because it was up a little bit less, or 3 shares. And then today I'm probably selling another 5 shares. We're getting overbought here. We don't have a negative divergence on our RSI, so most likely we get a little pullback, and then we get a slightly higher high, and then we get our negative divergence. So we get a pullback tomorrow. I'll buy back those shares I sold today, and then and wait for another higher high. So I'd be selling a little bit, touching your national retail properties. And the other REIT that I suggested, besides IYR, the uh, broad-based REIT index, which I sold a little bit today because it was up. American Homes for Rent, it was not up today. So I think it's slightly down. So I would be maybe taking half of what I sold in national retail REIT, and I would be, buying a little bit more here. So that's my strategy on that. Your reward to risk right now here is huge. TLT, I just want to communicate here that I'm not a long-term investor in TLT. I'm looking for about 100, uh, and we're at like 94, 94.5. So we got, a ways to go. But like yesterday on this big update, you should have been selling a little bit. So again, and if you didn't, maybe today you want to sell a little bit. So you want to lock in some of these gains in case, things turn and go the other direction. You want to make sure you make money on all these trades. And thank you for watching. Please like and subscribe. If you do, you'll get these intraday, and I think it'll be helpful, and at least you'll have a better idea of what I'm thinking. Thanks for watching Chart Built Wealth. Have a great day, and talk to you soon. Adios.